Yesterday's rally in the stock market, I think, may have cleared up a bit of short-term timing. There was a possibility that this down day on Friday was signaling that the intermediate cycle had topped and we were going to get 2 or 3 weeks of declining price into a intermediate cycle low, maybe into the beginning of earnings season. And I believe Alcoa reports on the 17th. But with yesterday's rally, that has probably come off the table. And I would say the odds now are more likely that we will rally into the first week of earnings season and get our intermediate top maybe partway through that first week, or by the maybe by the end of the first week of earnings season. I also had a bit of a problem trying to conceive of an intermediate top that occurs before the semis test those all-time highs at 1362. You know, if the intermediate top were to occur before that, then the semis would have to try and get through that level on the next intermediate cycle, and I don't think they're going to be able to get through that level on the first try. So it makes more sense for a test of the all-time highs to occur during this intermediate cycle, followed by a multi-week pullback, rather than this starting an intermediate decline here, and then we come up and test those all-time highs during the next intermediate cycle, and realistically probably have to pull back again. So I think the odds are better at this point that the stock market continues to rally, maybe into like the week of the 22nd, and the semis reach that all-time high at 1362, and then we get our pullback into a more sustained correction, so something that would pull back at least 3 to 5%. And I've also shown this breakout before as well. It's a little hard to see. I'll zoom this in here in just a second, but we've broken out above this bull market channel trend line on the S&P. We broke out on the Dow and the NASDAQ quite a while ago. All right, let me zoom in here a little bit. So if we could get, say, another 3 weeks of rally and get a little more separation above this trend line, then a realistic pullback would be a retest of this trend line from the upside. So another potential pattern in play that might suggest we still have 2 or 3 more weeks to go before this larger intermediate cycle here were to top and then drop down into a slightly bigger correction, maybe something that looks like this here or this here. Although I will say we are getting fairly deep timing-wise into the intermediate cycle. We could be 23 to 24 weeks in by the time we get that next intermediate cycle low. So if we rally for another 3 weeks, we aren't going to have a lot of weeks left to move down into an ICL. So it's probably going to be fairly mild again, similar to how these last 2 intermediate cycle lows behaved. So really not expecting anything much deeper than a 3 to 5% pullback. And we are in the what I believe is the bubble phase of this bull market. So we don't really need to produce really sharp, big moves down during ICLs during a bubble phase.